All right, ladies and gentlemen, number two. Boy, it sure seems like this whole debt thing, debt to GDP, is really the articles and the news I'm catching on this is a lot more frequent, and it's the same type of stuff. Debt problem, debt problem, debt problem, GDP, debt to GDP ratio, terrible growth. You know what I mean? It's just, I'm not even trying hard to find these. It's kind of rapid fire. So if you were an observer and you could fast forward and rewind and that kind of thing, and you saw a little blip about debt to GDP and growth, or let's just keep it debt to GDP, and then you heard a little bit more frequently, another one or two or three, 4, 5, instead of just the occasional one. And then there's a new one, economic growth, countries. That's coming up once, every now and then. 2 times every now and then. 3, 4, 5 times recently. Another 3, 4, 5 times, right? You could argue that if I turn this dial forward to look into the future, I think there's going to be a problem with debt to GDP, or just simply debt. And it also includes something, or is affecting economic growth. Because I'm hearing these things more and more and more and more. Again, if sooner something comes, climax, okay, here it is, it's in your face. Now what? Deal with it. So if I'm to use that same principle here with how many times I keep talking about this over the last 2 months now, I think we got us a problem. That is, which you've already known about. But I think a better way of saying it is, I think that problem isn't just right around the corner. It's knocking on the door at this point. So there's 2 things. First of all, dollarcollapse.com, and then this thing from Zero Hedge. Eric Peters, if China and the World Bank are right, we're heading for a depression. Really? Right about what? Some people blindly invested offshore and were in a rush to do so, explained China's central bank chief, justifying his recent capital controls. Some of this outbound investment was not in line with our own policies and had no real gain for China. End quote. No doubt he's right. The tycoons fleeing Chinese capital markets have done so selfishly. Quote, so to regulate capital flows, I think it is normal, concluded the central banker. Chinese credit relative to GDP has doubled in the past decade to 300% now, which remains less than the U.S. at 350%, but the rate of Chinese credit growth is as unsustainable as it is difficult to reverse without tanking the economy. Key word. The tycoons are running from the dynamic because such loops almost always end badly. Anyhow, after so many years of secular stagnation fears, global investors have grown conditioned to run. They've been running away from fear for so long, they've forgotten how to run towards greed, which has left them blindly holding over $10 trillion of bonds, which yield negative interest. Now, this might make sense in a deflationary depression, but the global economy has not seen such synchronized cyclical growth in years. Inflation is likewise firming everywhere. But China, speaking of inflation, the other thing I want to talk to you about, but China lowered its growth target again, as the World Bank warned that today's strong global upswing in confidence and financial markets are not enough to pull the world out of a low growth trap. So China lowered its growth target again. We thought we were going to be here. Nope, our target's down here. And the World Bank, that's the equivalent of the Bank for International Settlements, the IMF, the club, those little 3 club members. But the World Bank warned that today's strong global upswing in confidence, we're all confident. Do you remember the movie Never Ending Story? Yeah, the Never Ending Story. Be confident, Atreyu. Be confident. Well, be confident, world. Everything will get better. Smoke hopium. The World Bank warned that today's strong global upswing in confidence, in other words, blind faith, in financial markets are not enough to pull the world out of a low growth trap. Whoa, wait a minute, this isn't enough. Make it enough. If they're right, we're surely headed for depression, because all this new debt requires robust economic strength to shoulder the weight of the debt. In other words, video I did the other day takes $4 of debt creation to equate to $1 of GDP. Wow. So if you're piling on the debt, but you're not piling on the way to pay for the debt, how does that end? You see, this is simple math. It is a mathematical certainty that this does not end well. It can't. Why? Because it's math. If you have a certain amount of coming into your bank every week, you make $1,000 every week. And for simple math, there's 4 weeks in a month. You make $4,000 a month. It never changes. It is what it is. Have a nice day. But over here is your spending, right? And over here was the $1,000 a month coming in. And when you first got started, it was fine. Excess, got a little bank account, a little nest egg, everything's good. And then the nest egg started being taken down. And now you're at the point where it's not even equal anymore. In other words, you're flat in your bank account. You are now grossly overdrafted, if you know what I mean. The $1,000 you're putting in every week, you're spending $1,400, $1,500 every week. And your idea to get out of it is to spend $1,600 to $1,700, $1,800 a week, which will give you a raise of $1,100 instead of $1,000 a week. You're now making $1,100, but it's gonna cost you $1,600, $1,700, $1,800 a week now. But you did increase your pay a little bit. What the hell sense does that make? It doesn't make any, does it? That's what we're talking about. This is what this is. But European debt markets are still largely priced for depression. And as with JP Morgan CEO Jamie Dimon announcing the return of animal spirits in America's economy, it seems more likely that this cycle ends like every other, with a blind run toward greed. Now, speaking of the debt problem, dollarcollapse.com. 2016 debt binge produces, surprise, 2017 inflation. Guess what that means for 2018, he says. Just as everyone was finally accepting the idea of deflation and negative interest rates, inflation decides to pay a return visit. In the past day, articles with the following headlines appeared in major publications around the world. Speaking of, remember I was telling you how things keep coming faster and faster. We only used to hear about that once every now and then. Now it's once a freaking week. It's becoming daily and certain things, right? These are some of the important things anyways. Around the world, here's some headlines. Swiss inflation rises at highest monthly rate in 5 years. China February producer inflation fastest in nearly 9 years. Year-over-year import prices at highest levels in 5 years. ECB keeps bond buying rates unchanged amid inflation flare-up. Food inflation doubles in a month as UK shoppers start to feel the pinch. These are all immediately, as the Webbot would call it, immediacy data. I'm going to call it immediacy data right now. Happening now. These aren't old articles. These aren't old headlines. These are happening right now. What happened? Well, towards the end of 2015, most of the world's major governments apparently got spooked by deflation and decided to ramp up their borrowing and money creation. China, for instance, generated the following stats in 2016. New loans totaling 12.65 trillion won, or 1.8 trillion US dollars worth. M2 money supply growth of 11%, and debt to GDP ratio jumped from 254% to 277%, which I just discussed the other day as well. In Europe, the European Central Bank ramped up its bond buying program, pumping about 1 trillion newly created euros into the continental economy. And the U.S. increased its federal government debt by over $1 trillion, presumably spending the proceeds on things that raise wages or increase the demand for commodities. Since there's no way, and by the way, in case you want to look at a chart that tells you we have a problem, 1977 over here on the left, 2016. federal debt closed fiscal 2016. 19.5 trillion. Man, what happened in 1977? What? Grandma, tell me about the good old days. Did the United States really have less than $1 trillion? Yeah, son, it did. It really did. At one point, it had less than $1 trillion in debt. But Papa or Grandpa, not even Grandpa. No, you don't have to ask Grandpa. Papa will be able to tell you because it's happening so fast. Papa, is it true? It's true. It's over $20 trillion. Anyways, since there's no way for the growth of the global production to match this blistering pace of new money creation, the result is higher prices for just about everything. Oil and most other industrial materials are more expensive, wages are rising, long-term interest rates, the cost of money, are up. You name it, it went up the past year. What comes after a debt-driven spike in inflation? History is pretty clear on this one. Instability, as rising interest rates spook the fixed income markets, and rising business costs spook stock speculators. Toss in global political upheaval as populism, the inevitable results of previous bad policies, sweeps the globe, and the great moderation of the past year, which was, as it turns out, just a bunch of clueless people borrowing a ton of money, will give way to something a lot more interesting. The only amusing part of what's coming will be the disarray among the economists and politicians who have been advocating a higher inflation target, as if a modern economy is a thermostat that can be dialed up and then back down by an omniscient homeowner. As Jim Rickards likes to say, it's not a thermostat, but a nuclear reactor that can, if allowed to get too far out of balance, go critical. Now that, my friends, I'd say is a pretty accurate statement. We have a massive debt problem. However, wait, there's more. China has the same problem. The European Union, all of those countries, Italy, Spain, Germany, I would say the UK, but they're kind of, heading out the door. They're leaving out the door before the issues happen in the EU. So this is a problem everywhere. South American countries, same thing. Everybody's borrowing out of control. Everybody. Funny enough, Russia has paid off all of its debt recently. Now that's interesting, isn't it? Russia has paid off all of its debt. So there is one country that's doing pretty good. And I'll also add Iceland. Iceland's doing very well too. But how many countries are on the face of the earth? I don't know the exact number, but there's hundreds. So when you look at that chart, which I really want to bring that back up if I may. In all these colors, in Europe, the European Central Bank ramped up its bond buying program, pumping about $1 trillion newly created euros in the continental economy. So if you look, 2014, this is 2014 right here, 2014, 15, 16. You see these big spikes. Then you go down here, U.S. federal debt. Again, the debt ceiling we're about to talk about, and you get to watch these morons on TV, C-SPAN, and fighting the debt. We got to be fiscally responsible. We can't keep kicking the can down the road. All right, we're going to have a vote. Yeah, we kicked it down the road. But I thought you guys said you can't keep it. We got to be fiscally responsible. And you voted and you kicked that can. Again, we are addicted now. It's like the old saying, the drug addict. One shot does him good. He's high for a while. Now it's not lasting a while anymore. I need 2 shots. I need a stronger drug. It's as strong as I can give you. Well, I need more of it. Okay, well, I'll give you more of it, but as strong as I can get. Okay, good. Now he needs 2 shots. Then he needs 3 shots. Next thing you know, he needs a ton of shots just to get the same feeling he originally had. But then there's a twist all of a sudden. He has to keep ramping up. Now, keep in mind, if he ramps up too much, he's going to kill himself. But he doesn't care. He's in this case a debt junkie or a druggy junkie. This is for this purpose debt junkie. He needs more shots and more shots, more shots. And it used to just bring him back to the original first shot when he used to stay high for 4 hours. That one shot, man, back, remember? This is him, right over here, 1977. That was the shot he needed in 77, and it lasted 4 hours. Everything was fine. Fast forward to today in 2016, 2017, this is what he needs. That much more drug, if you will, or debt, if you will, to give him back that growth, economic growth. But he's not getting it anymore. Now, even though he's doing massive amounts of shots in his arm, he's only getting 1 hour. Not 4 like he used to. 1 hour. That's as good as it gets. So what does he do? I still got to have more. So he'll get more until he kills himself. That's around the time, I think, when this guy said, like, as... was it Rickards in this one? No, it was this one. Jim Rickards. Yeah. As Jim Rickards likes to say, it's not a thermostat, but a nuclear reactor that can, if allowed to, get too far out of balance, go critical. We are way far out of balance, my friends. We are way out of balance. Somebody tell me, because I see the comments, the trolls, the shield. This has been going on. Nothing's going to happen. They've been doing this for so long. They'll just keep doing it. How can this keep going on, what I just showed you? How can borrowing $4 to create $1 in GDP continue? And remember, it didn't used to be that way. It used to have to borrow a little bit and you'd get more. In other words, 50 cents of borrowing produced $1 GDP. Then $1 to $1, then 2 to 1, 3 to 1, 4 to 1. So what do we see then? What does this mean? It means that'll be 5 to 1 soon, 6 to 1, 8 to 1, 10 to 1. At what point, and ratios don't matter, but at what point does it get to the point of this isn't doing anything anymore? We've pumped as much debt as we can, and it is doing nothing. In other words, the guy gets high, sticks all the needles as much as he can. He knows exactly how much he can put in his arm before he dies. He's at the absolute limit, puts it in there, sits back, wait for that feeling, that high to come on, and it doesn't come on. He's going to think, I just got faked. Someone gave me fake drugs. No, sir. You got the real stuff. You got the real debt, the good debt stuff. But you've taken so much of it, it has no effect anymore. So they're going to borrow into oblivion, and it has no useful effect anymore at all. That's when this goes down. Again, is it not incredibly amazing? 1988 cover of The Economist magazine. Phoenix rising out of burning dollar ashes. Different currencies of the world burning. Phoenix rising with a gigantic gold coin 2018. Title of the magazine, Get Ready for a New World Currency. Because if we're all in this situation, we're all going to agree globally, let's wipe that away and start over with this new thing. Not the old way, because our people ain't going to like that. But they don't just have an agreement without us feeling pain. Because if we don't feel pain, we're never going to agree. Let's go to a world system, financial system, global currency. No, it was fine. You guys kept kicking the can of the debt ceiling. Nothing has changed. Like you've been saying, you can kick it forever. It's fine. You've got control now with the central banks. Keep going. Just keep going. Everything's fine. Well, we really want to join this new world currency, but everything's fine. Why would you do that? They would never do it. You must feel severe pain, financial pain, in order for you and everybody around you to say, what just happened? Oh my God, I'm panicking. What? Breaking news. Only way to fix the problem, join a global currency system, because we can't there'll be no trade deficit, things like we've dealt with when we had to, when the trade deficit can change just because a currency went up or down, can screw somebody while making the other person better off. Currency wars, we can't do that anymore because we'll be on a single currency. This is great. And it will solve all the problems everyone's feeling right now. Oh, but by the way, America, your lifestyle, you're not going to like this. It's going to have to be toned down a few notches because you've taken 25% of the world's output, and that's not sustainable in this new world we're trying to get to. So if you don't agree, you're going to feel the most pain of all. Well, we don't want the most pain. We'll accept it, right? Like Lindsey Williams was told. You will get back some of what you have today, this American lifestyle, but you will never get back what it has been at the peak, which is recently, nowadays. You're not going to have that lifestyle. It is not in the cards. And I think these charts I just showed you kind of sort of prove that. Okay? Just make sure you have your precious metals for that rainy day, and some Bitcoin don't hurt, right? Take care.